It's October 2025, and I've got a fresh new update on crypto risk levels to keep your investments on point. Today, we're diving into risk charts for top assets like Bitcoin, Ethereum, Solana, Sui, and Hedera Hashgraph in my top crypto stock pick strategy. Give this video a like, hit the subscribe button, and turn on notifications so you don't never miss an update on how these risk levels shift. So let's lock in those gains and avoid any round trips. Stick around, you don't want to miss this. Hey everyone, welcome back to the channel. And if you're new here, I'm Patrick. I've been an investor for over a decade, options trader for 7 years, and crypto investor for 7 years. I've grown my portfolio to over $250,000, and I run Apex Wealth Collective, a school community for investors where you can follow my portfolio journey, see all of my buys and sells as soon as I make them, and get deeper market analysis. Also get access to all of my YouTube content early, and get your questions included in any future Q&A videos. So let's get right into the charts. So first off, let's look at total crypto market cap. Now remember, with risk charts, all we're really looking for is where we are based off of a 0 to 1.0 risk scale. 0 means super undervalued price, so good time to buy. 1.0 means super overheated prices, a good time to be looking to sell. And as you can see, at least with total crypto market cap, tops of bull markets have always been signaled with a grouping of several red dots, which are risk value from 0.8 to 1.0. So I would say it's safe to assume that with this bull market that we're in right now, total crypto market cap will probably do the same. Now, if we look closely in 2018 and in 2021, total crypto market cap hit 1.0 at the very top of the market. I would personally be waiting to start selling somewhere around 0.95 risk level and scale out as the value climbs higher across all crypto assets. Now, from the color-coded perspective, we'll jump to current estimated risk levels. Now, with total crypto market cap, we're currently sitting at a risk value of 0.562. So we're right in the middle of the pack, so to speak. Now, if we look at the 1.0 risk value at the current moment, it's estimated to hit 17.77 trillion. That means with current market conditions, the top of the bull market should be somewhere around 17.77 trillion total crypto market cap. This means we're approximately like a 5.5x from the top here. That is a massive gap. Now understand that these values do change over time, but what I have noticed is that during bull markets, this number almost always changes to the upside. And as we start to see some looser financial conditions around the world, I see this 1.0 value being higher than it is today. Although 17.7 trillion, it's a good target to start selling. You would make a lot of money with almost any blue chip crypto if total crypto market cap were to reach that value by the end of this bull market from where it is today. Next, let's look at Bitcoin. So here's Bitcoin's color-coded risk chart. It just says the total crypto market cap tops in bull markets are marked by a cluster of red dots, signifying a 0.8 to 1.0 risk level being hit. Now, the current risk value Bitcoin is sitting at is 0.507. So again, the middle of the pack, nowhere near top in the market. And if we look closer, Bitcoin hit max risk at a 1.0 value in 2013 and in 2017. However, it never really reached past the 0.927 value in the 2021 peak. Now, this might have been because the 2021 bull market cycle was completely front-loaded with emergency liquidity due to sickness that shall not be named, and so crypto had a messy double top situation, causing what we refer to as a stunted cycle. I don't think we see this problem this time around because there isn't a global pandemic causing the whole world to shut down and stop working, so I see the cycle mirroring the 2017 top more than it does 2021. So I personally will be targeting a 0.95 level to start getting out of my Bitcoin positions and scaling out more as the value climbs closer to 1.0. Now, if you want to be conservative and don't trust the cycle to outperform 2021's cycle top, start scaling out of Bitcoin around like a 0.9 level. Now, if we switch to the estimated risk levels on Bitcoin, Bitcoin should top out based off current market conditions if it hits a max 1.0 risk value at $325,000. Now, that's a 3x from current prices. Now, why is Bitcoin supposed to go up less than total crypto market cap? Well, that's because as crypto adoption grows, Bitcoin's dominance will continue to drop as more networks grow use cases, such as Ethereum, Solana, Sui, HBAR, many others. So please stop listening to Bitcoin maxis who think Bitcoin is the only useful protocol, because it's not. It's not. Bitcoin cannot come close to digesting even a fraction of the throughput required to bring traditional finance onto blockchain rails. So it will be accompanied by faster, cheaper, and more efficient networks like Ethereum, Solana, Sui, HBAR, etc. Now, I love Bitcoin, don't get me wrong, but last time I checked, the world doesn't revolve around gold as a commodity, and the world won't just revolve around Bitcoin as a commodity either, even though I believe it's a superior asset to gold as a store of value. It'll be a nice big chunk of the digital market, but just not the whole thing. Just as gold isn't the entire stock market, real estate market, and derivatives. Store of value isn't the only use case, but anyways, I'm going on a tangent here. Just understand that Bitcoin dominance will continue to trend down over time, while other networks do blossom with some different use cases that aren't possible on the Bitcoin network. So as a result, Bitcoin should see smaller and smaller gains as the crypto market does mature. Now let's take a look at Ethereum. Here is Ethereum's color-coded risk chart. Now, if you notice, Ethereum's color-coded risk chart has a lot more red in it. Ethereum has spent a lot more time in the red risk levels than Bitcoin, so above a 0.8 value. Now, this means tops in Ethereum will be trickier to time using this chart. However, still a good indication of how high Ethereum can go with the estimated risk levels. Now, Ethereum currently sits at a risk value of 0.65, and Ethereum did hit a 1.0 value back in 2017, only maxed out at 0.84 in 2018, and then maxed out at 0.929 in 2021. This means Ethereum will most likely not hit a 1.0 max value based off past performance. I mean, anything can happen in the future, but I like to take more conservative price targets in crypto because of how quickly tides can change here. So in Ethereum's case, I want to start taking profits around like the 0.9 risk value and scale out more of my position as it gets closer to that 1.0. Now, based off of the estimated risk value chart, Ethereum, as of current market conditions, should hit a max 1.0 risk value at like $12,340. So if we scale back to a 0.9 risk value, we will be targeting around $11,000 to start taking profits, based off of current market conditions, of course. Now, I fully expect these values to change and move higher as the bull market develops, but still, $11,000 is a 3x from current prices. Now we're going to move over to Solana. Here is Solana's color-coded risk chart. Now, if you notice, just like with Ethereum's color-coded risk chart, Solana has a lot of red level risk plots in it. Solana has spent a lot more time in the red risk levels, so above a 0.8 value. This means tops in Solana will also be trickier to time using this chart. However, still a good indication of how high Solana can go based off of the estimated risk levels. Now, Solana's current risk value sits at 0.645, and Solana did hit a 1.0 value back in 2021, which almost marked the price top of Solana's move. Now, this means that Solana will be tricky to time the top, as a lot of time is spent in the 0.9 to 1.0 range in history. But again, anything can happen in the future, so I like to take more conservative price targets, and depending on how early it is in Solana's adoption, that can change. So in Solana's case, I want to start taking profits around the 0.9 risk level and scale out more of my position as it gets closer to 1.0. Now, based off of the estimated risk value chart, Solana, as of current market conditions, should hit a max 1.0 risk value at $967. So if we scale back to a 0.9 risk value, we'll be targeting around $800 to start taking profits, again, based off of current market conditions. That is an easy 4x from here. Now remember, these values aren't static. I fully expect them to change and move higher as the market develops, just like with Bitcoin and Ethereum. Now, this one is the crypto I am most excited about this cycle, Sui. Here is Sui's color-coded risk chart. Now, if you notice, Sui's chart has a lot of blue and green plots on it this time. Sui's chart is a little harder to take at face value because it is very early in its adoption cycle. So the confidence of the algorithm in this case is very low. So values can change very quickly if algo confidence does change. This means tops in Sui will also be trickier to time using this chart. However, still a pretty decent indication of how high Sui can go based off of the estimated risk levels. Not much of a history to work off of, but I will be keeping an eye out on this chart a lot more because Sui currently sits at a risk value of 0.258. And in Sui's case, I want to start taking profits around the 0.8 to like 0.9 risk value since it is more of a risky play compared to Bitcoin, Ethereum, Solana, and scale up more of my position as it gets past 0.9 and gets closer to 1.0. Now, based on the estimated risk level chart here, Sui, as of current market conditions, should hit a max 1.0 risk value at a whopping $53. So if we scale back to a 0.9 risk value, for example, we will be targeting around $34 to start taking profits. That is a 13x from current prices. Huge. Again, these values aren't static, so I fully expect these values to change and move higher as the bull market develops and Sui gains more adoption. It seems a little crazy, so we may have to be even more conservative with our figures. Depends how things evolve. I have a hard time personally seeing these types of values getting hit, but remember, never say never. You never know. You never know what the market will give you. So you have to rely on new data as it comes out to alter your game plan. And last but not least, from the crypto side of things, is Hedera. HBAR is also a fairly new crypto as it began trading publicly in 2020, so it is early in its adoption phase. However, it did hit a 1.0 risk value in 2021, coming very close to marking the top of HBAR's move in that bull market cycle. Now, currently, HBAR sits at a value of 0.397, so it is pretty undervalued, relatively speaking, compared to the more blue chip cryptos we just talked about. Now, not as much red throughout the tops of bull market cycles with HBAR, so I will be targeting a 0.9 to 0.95 risk value to start selling HBAR and then scale out more as we approach closer to 1.0. If we look at the estimated risk levels for HBAR, we see that as of current market conditions, max 1.0 risk value is $1.69. That's a 9x from current prices, and about a 5.5x if we start taking profits at a 0.9 risk value. Pretty good risk to reward here as well. Now, lastly, the honorable mention for today's crypto update, the stock strategy, ticker MSTR. Now, if you guys have watched any of my previous videos on this channel, you would know the biggest TradFi bet I've taken this bull market cycle is a position in MSTR and its 2x leveraged ETF brother, MSTU. I really believe in MSTR and its future as a major Bitcoin treasury player in the market, and its current risk value sits at 0.63, and its max 1.0 risk value at current market conditions is sitting at $1,114. So approximately a 3.5x from current prices. MSTR did hit a 1.0 max risk value in the last blow-off top at the end of the bull market in 2021, so there is a chance that it hits again. But I will be playing it more conservatively and will begin selling my 2x leveraged MSTR position, MSTU, at a risk value of 0.85 and MSTR itself at a risk value of 0.9 or higher. So in conclusion, we are nowhere near a top in any of these assets that we talked about today. If anything, I want to keep adding to these positions whenever I can right now. The bull market still has legs and these risk charts back up those claims. We will see how these risk values develop over the bull market. So like this video and subscribe to the channel to keep up to date as the data rolls in. And don't forget, if you want to get more involved in the community, sign up to my school community, link in the description below. Now, if you have stuck around this long, go ahead and catch another one of my videos right over here, or check out my channel right over here, where you can take a look at all the other content I have to offer about investing in my personal investing journey. And that's all for me today. I'm Patrick with Apex Wealth Collective. Take care, and I'll see you in the next video.